Friday afternoon, a 12-person accounting firm outside Denver. Their controller, call her the person who actually presses the button on outgoing wires, gets an email from the firm's managing partner. Subject line references a real acquisition the firm had been quietly working on for 3 weeks. The tone is exactly right. The signature is exactly right. It even replies correctly when she asks a clarifying question about the closing timeline. The email asks her to wire $84,000 to a new escrow account before 5 o'clock because the deal closes today and the partner is stuck in back-to-back client meetings and can't take a call. She's done wires like this before. She sends it. At 5:40, the real managing partner walks past her desk and asks how the Henderson filing is going. She mentions the wire, expecting him to say thanks. He has no idea what she's talking about. There was no new escrow account. There was no email from him about it. The money left at 4:52 p.m. By the time the bank was called, it had already moved through 2 more accounts. It was not encrypted. It was not held for ransom. There was no malware anywhere on the firm's network, their antivirus, their firewall, their backups, everything looked exactly the way it's supposed to. Somebody just asked nicely, in a voice that sounded exactly right, and the money walked out the front door. Here's what makes this different from every other cybersecurity threat you've probably heard about, and why the usual advice doesn't fully cover it. Ransomware breaks in. It exploits a vulnerability, drops malware, encrypts your files. There's a technical event you can point to, a patch that was missing, a link that was clicked. Business email compromise doesn't break in anywhere. It's a conversation. There's no malicious attachment for your antivirus to catch, no suspicious link for your spam filter to flag, because in a huge share of these cases there isn't one. The email is just words, written by a human being who has done their homework on your business. There are 2 ways attackers pull this off, and the second one is much scarier than the first. The simple version is domain spoofing. They register a lookalike domain, swap an M for RN, add a hyphen, use a different top-level domain, and send from an address that looks right at a glance. Your eye fills in the gap. Nobody reads an email address character by character. The advanced version is called mailbox compromise, and it's worse because there's no lookalike domain to catch, it's the real account. The attacker got into an actual inbox, usually through a reused or phished password, and instead of doing anything immediately, they wait. They read. They learn who talks to whom, what your invoices normally look like, when your big wires typically go out, how your partner actually signs off an email. Then, weeks later, they insert themselves into a real, ongoing conversation at exactly the right moment, often the exact conversation about a real payment that was already going to happen anyway. That's what makes it so convincing. They're not inventing a scenario. They're hijacking one that was already true. Let's put a number on how big this actually is, because it's larger than most business owners assume, and larger than the threat that gets all the headlines. The FBI's Internet Crime Complaint Center, IC3, tracks reported losses across every category of online fraud, and for several years running, business email compromise has been the single largest category by dollar value, ahead of ransomware, ahead of investment fraud, ahead of everything else they track. We're talking billions of dollars a year in the United States alone, from reported cases, and the FBI itself is clear that a large share of incidents are never reported at all, because the business is embarrassed, or assumes nothing can be done, or simply doesn't know where to report it. Compare that to ransomware for a second, since that's the threat every business owner has been trained to fear. Ransomware is loud. It announces itself with a ransom note on every screen. Beck is quiet, the money is just gone, and often nobody even realizes it was fraud until days or weeks later when the real vendor calls asking why their invoice still hasn't been paid. And the reason the average loss per incident is so high is simple. This isn't a numbers game like spam, where you send a million emails hoping 1% bite. A Beck attacker researches one target, your company specifically, for days or weeks before sending a single message. That's a lot of effort for a small return, so they go after the biggest wire they can plausibly justify. A single successful attempt often nets more than an entire ransomware campaign against a small business. There are a handful of specific plays that account for almost every dollar lost to this. Once you've heard them named, you'll recognize the shape immediately. Vendor invoice fraud. The attacker, often through a compromised vendor mailbox, not yours, intercepts a real invoice that was already headed your way, and sends a follow-up, "Quick update, we've changed banks, please use these new details for this payment and all future ones." The invoice amount is real. The vendor is real. Only the bank account is wrong. Executive impersonation, sometimes called CEO fraud. That's what happened in our opening story, an urgent request that appears to come from someone senior, deliberately timed for when that person is unreachable to confirm it by phone. Friday afternoon, right before a holiday, mid-flight, anything that makes just call them briefly impractical. Payroll diversion. An email to HR, appearing to come from an employee, asking to update their direct deposit information before this week's run. The whole company's payroll doesn't move, just one person's paycheck, quietly redirected to the attacker's account, sometimes for 2 or 3 pay cycles before anyone notices. And the low-tech cousin of all of this, the gift card request. Are you at your desk? I need a favor, can't talk right now, need you to grab some gift cards for a client thing, I'll explain later. No wire transfer, no bank details, just an employee spending their own afternoon buying $2,000 in gift cards and reading the codes into a text message. Small dollar amounts, but it's often the first thing attackers try, because it tells them who at your company will comply with an urgent request from the boss without questioning it, and that's reconnaissance for the bigger ask later. Notice what all 4 of those have in common, because it's the same pattern our opening story showed. There is always a moment where one specific habit, one procedure that either exists or doesn't, is the entire difference between attempted fraud and money gone. For the vendor invoice, does anyone independently verify a change in bank details before paying it, using a phone number they already had on file, not one in the email? For executive impersonation, is there a rule that says a wire above a certain amount always requires a second-person sign-off, no matter who's asking or how urgent it sounds? For payroll diversion, does HR confirm direct deposit changes through a second channel, a callback, an in-person check, before the next payroll run, rather than acting on the email alone? For the gift card ask, has anyone on your team ever been told, explicitly, that the boss will never ask them to buy gift cards over text or email, so the very first one of these is easy to recognize as fake? In every real case I've looked at, the fraud succeeded not because the email was unusually sophisticated, most of them aren't, but because no verification step existed anywhere in the process. The email didn't need to be perfect. It just needed to be the only source of truth in the room. None of the fixes for this require much of a budget, which is the actual good news here. This is one of the cheapest categories of cybersecurity risk to significantly reduce. Start with your email itself. 3 technical records, SPF, DKIM, and DMARC, tell other mail servers which servers are allowed to send email as your domain, and what to do with messages that fail that check. Most small businesses have SPF and maybe DKIM set up by whoever configured their email years ago, but not DMARC set to actually reject or quarantine failures, which means lookalike spoofing of your own domain against your own customers often sails straight through. This is a one-time DNS change. It typically costs nothing beyond an hour of a technician's time. Next, build a callback rule, and make it a real, written policy rather than something people are expected to remember under pressure. Any request to change bank details, or any wire above a set dollar threshold, gets verified by phone, using a number already on file, never a number provided in the email itself, before the money moves. That single habit would have stopped every scenario in this video. Add dual approval for anything above that threshold. A second, different person has to sign off, with no exceptions for urgency. Urgency is the attacker's tool, not a reason to skip the step. If anything, treat urgency itself as the red flag. And run simulated phishing tests a few times a year, not to catch people out, but so the first time someone on your team sees a message like this, it's a drill they recognize, not a live Friday afternoon with real money on the line. Here's a 5-minute test you can run today, with whoever handles your payments. Ask them directly, if a vendor emailed tomorrow saying their bank account changed, what would you do before paying the next invoice? If the honest answer is, "I just update it and pay," you found your gap, the exact gap from this video's opening story. Then ask 3 more questions and write down the answers. 1. Is there a dollar amount above which a wire needs a second person's approval, in writing, today? 2. Does anyone verify bank detail changes by phone using a number that isn't the one in the email? 3. Does your email system reject messages that fail SPF and DKIM, or does it just flag them and let people decide? If those answers are vague, or "I think so," that's the same answer as no. This isn't a sophistication problem, the emails themselves are often ordinary. It's a process problem, and it's fixable this week, for the cost of 1 policy document and 1 conversation with whoever manages your email. If you found this useful, the earlier video on email authentication and account security covers the technical side of locking down your inbox in more depth, link on screen. Subscribe, and I'll see you next week.